Episode 4: Bitcoin-backed banking, the next financial revolution. Welcome back to From Shells to Satoshis, the podcast where we break down how money has changed from ancient times to the digital age. In episode 3, we talked about how to actually invest in Bitcoin. Today, in episode 4, we're looking at a world where financial services aren't built on printed dollars, rising government debt, or inflation. Instead, they're built on a fixed supply digital asset, Bitcoin. What if your savings account paid you interest in Bitcoin, backed by Bitcoin, and no central bank could devalue it? It sounds futuristic, but the idea is already starting. So, what exactly does Bitcoin-backed banking mean? In today's system, banks use fiat money, US dollars, as their reserve asset. They lend dollars, borrow money, and price everything in dollars. And because dollars can be printed at any time, banks operate inside a system where the rules can change overnight. We've seen this with inflation, interest rate spikes, bank bailouts, and rising national debt. Bitcoin backed banking flips that model upside down. Instead of lending based on money that can be created out of thin air, these banks could lend against a hard, fixed supply asset, Bitcoin. No printing, no dilution, no surprise inflation. It's like a return to the gold standard era, except for the gold, it's digital, verifiable, and impossible to counterfeit. A Bitcoin-backed bank could offer savings accounts denominated in BTC, loans issued against BTC collateral, bonds backed by BTC reserves, preferred stock that pays yield in Bitcoin. Right now, fiat-backed banking is tied directly to inflation and government debt. When governments spend more than they earn, which is basically every year, they borrow, a lot. And when debt gets too high, central banks respond the only way they can, by printing more money and pushing down interest rates. That means the dollar in your bank account can slowly lose purchasing power. But Bitcoin can be printed. Its supply is capped at 21 million. That gives it a property that no fiat currency has, absolute scarcity. If banks build on Bitcoin instead of fiat, the entire financial system becomes more stable because the base money never changes. A savings account backed by Bitcoin would be built on something that cannot be manipulated, inflated, or devalued by a policy decision. We're not talking about a theoretical idea. It's already happening. Strategy is taking the first major steps. Michael Saylor, the company's executive chairman, is creating a Bitcoin-backed preferred stock. Here's how it works. Strategy owns a huge amount of Bitcoin. The company issues a special class of preferred shares. These shares pay a yield, essentially a dividend, that is supported by the company's Bitcoin holdings. It's the first mainstream example of a financial product whose stability comes from Bitcoin, not dollars. Saylor's goal is simple: create a way for investors to yield from the world's strongest asset without needing to manage a wallet or private keys themselves. It's like owning Bitcoin-denominated bond, a modern version of fixed income, but built on digital gold. In the traditional banking world, we have something called the yield curve. It shows interest rates for government bonds, short-term, long-term, and everything in between. When you buy a US Treasury bond, you're basically lending money to the government. Saylor's preferred stock idea could evolve into a full Bitcoin yield curve. Imagine choosing between a 6-month Bitcoin-backed savings product and a 2-year Bitcoin-backed bond. All of these backed by a fixed supply asset instead of a government IOUs. In a world where fiat yield curves shift constantly because of inflation, debt, and policy decisions, a Bitcoin yield curve could be steadier, clearer, and more transparent. If strategy can do this successfully, more companies will notice. Over time, we could see banks issuing Bitcoin secured loans, corporations issuing Bitcoin backed loans, insurance products collateralizing with Bitcoin, even mortgages or car loans priced in Satoshi. This creates a parallel financial system, one running on Bitcoin, while the old system runs on fiat. Think about the same way the internet created a parallel information system next to newspapers and TVs. At first, both existed side by side. Over time, one became the dominant model. Bitcoin-backed banking could follow the same path. In episode 1, we started with the big picture, how money has changed from shells, gold, and paper to credit cards, mobile payments, and now digital currencies. We learned that money keeps evolving because technology keeps improving. In episode 2, we explored the problems with modern fiat money, inflation, unlimited printing, and rising government debt. These weaknesses help create the demand for a different kind of money, one with a fixed supply, transparent rules, and no central authority. In episode 3, we showed that you don't need to be a tech expert to access Bitcoin. You can buy Bitcoin ETFs, invest in companies that hold Bitcoin, or use regular brokerages to gain exposure. And now, in episode 4, we explored how Bitcoin could become a foundation of a new financial system. Instead of banks built on printed dollars and inflation, we looked at a future where savings accounts, loans, and financial products are backed by Bitcoin. Thanks for joining me on this journey from the origins of money to the rise of Bitcoin-backed banking. The financial world is changing fast, and understanding these shifts gives you a real advantage. Whether you choose to join the new system or simply watch it unfold, at least you know that the time is coming. Thanks for listening, and see you next time.